Kunal as well as Saurabh Jain. This one is coming in from Harsh. He's saying that he's holding 75 shares of Bandhan Bank at the rate of 300 rupees per share. He's saying he can hold on for 3 more years. What should be the strategy and how's the counter fundamentally? What's your take, Saurabh? What should Harsh do with Bandhan Bank?
I think there is always some kind of a problem with the performance of the bank. I mean, it is always better to switch to the good pedigree. I mean, if you want to switch, you can shift in the either in the Axis Bank or ICICI Bank. So I would rather recommend to switch, exit from the Bandhan and switch money to the Axis or ICICI.
Sticking with the banking space, we've got a question coming from Venkat Raman from Hyderabad, and he's asking about Kotak Bank at these current levels. Kunal, we spoke about ICICI Bank and Axis in the previous segment. What do you say about Kotak?
Yeah, very interesting, Alex, and going with the same theme that broadly banking stocks should outperform from here on, and given the context of the correction for Kotak Bank as well, I think these are very attractive levels. The stock has also come back to its 200 DMA, so that adds to the risk reward. If specifically someone wants to look at it from a longer term kind of a view, so Kotak Bank at 1800, 1820 where it's currently trading, I think should be a good buy level or to enter at current levels. Given the kind of time frame over the next maybe at least 1 to 1.5 year.
All right, this one is from Ratna Prabha and this one is for you, Kunal. Is it correct time to enter IEX for the longer term? What is the entry point that she should look at?
There are two important points over here. One is that even given the kind of data points and the events over the near term, over the next 1 week, it's going to be very difficult. That these high beta stocks can outperform. There would be a lot of volatility and choppiness into the price movement. So that's point number one. Possibly that many of these stocks can go through one more round of correction over the near term, assuming if one of the data points or the events, they don't come out in favor of the markets. But given the context of IEX over the last 12-15 months, how the stock has performed, I think it's a stock which has to be a part of your mid-cap portfolio as such. And you have to use strategies of buy on dips into these kind of names. So you can start at current levels, but as I said, make use of the volatility, assuming if the stock gets into a one more round of correction over the next 1 week, 10 days, then I think take advantage of that as well.
Saurabh, I'm just checking with you. Do you have coverage on Raghav Productivity Enhancers, RPEL? We've got a viewer who has, Prashant, who has bought at levels of 775. The stock is down about 5% today as well. It's trading at 622. He's wondering whether to hold on. He has no problem holding it for the long term, but he's wondering whether to book out and to move to something else.
We haven't covered this stock.
Okay. All right. Kunal, do you have any kind of view on RPEL? Can you pull it up on the charts?
No, Alex, no view on that stock.
UAE, who's asking about Infibeam and he's bought at levels of 43 per share. He's asking if he can hold, Kunal, for a target of 50 to 55. He says he can hold for 6 months.
See, again, first of all, it's not a top pedigree stock as such, where you can look at fundamentals playing out quite well, over the near to medium term. Technically as well, the stock doesn't look very attractive. It's just gone into a sideways range for itself. 38.40 seems to be a support, 50.55 seems to be a resistance, and the stock is dilly-dallying in this. The question is that if the market gets into a volatile phase, these are the kind of mid-cap names and small-cap stocks which can get into a lot of correction zone for themselves over the near to medium term. So you have to be very, very vague on
Right. This one is coming from Chaitanya. He's saying he's got stuck in Info Edge at the levels of 6,000 rupees per share. He's saying considering the fall in Zomato as well as PB Fintech, How are the fundamentals looking like for Info Edge for the longer term? Should he continue to hold on to it, sell or average? What's your take, Saurabh? What should Chaitanya do? And I'm sure that there are many other viewers as well who would want to know what should they do with their holdings currently with Info Edge.
I think if you look at the operations, there are no problem with the company. It's just about the valuations. Valuations have got stretched and now they have cooled off. I think there is no point in selling at these prices. I think he should better wait for a year or so, and I think he'll be able to get his price back, because the business per se is doing great, and it is the corrections of the valuation. I mean, the businesses are doing good enough, so he should wait. My take would be a hold on to it.
Saurabh, a pretty generic question coming in for you, and this one's from Sandeep. He's writing in from Tirupur. He's asking for two value stocks that you can suggest for the next 2 to 3 years.
Buy for the long term is the ICICI Bank, and the second I would recommend him from the industrials. I think Larsen Toubro should do well this year. I mean, 30-35% kind of a return can be expected from this large cap.
All right, so this one is coming from Venkat, and he is holding Nazara Tech at the levels of 2,480 rupees per share. He's saying he can hold on to this company for the longer term. How are the valuations? Are they justified? He wants a fundamental view as well as future growth prospects. And it's not only Venkat who's actually asked about Nazara Tech. I believe there is another viewer. It's Shashwati wants to know whether she can enter Nazara Tech at the current levels for the medium term. What's your take, Saurabh? How does Nazara Tech look for the longer term? Do you think Venkat can stay put, and can even Shashwati look to enter?
All these new age businesses have come at a very high valuation, and the market price them. The pricing in the market has also went up too high. There is a clear reflection from growth to value, as I have said earlier in the show. Also, we have seen good amount of correction coming in, be it Nykaa, Paytm, Nazara, Zomato. So I think it is more about the valuations at which these companies are trading. There is no point in waiting for your price to come. I think it's better to shift your money to these sectors like banking, capital goods, or the real estate.
We've got a question coming in from Warsaw, and this is Indu writing in. This one's for you, Saurabh. Would you say that Grindwell Norton is a good portfolio stock to hold? And if so, would you get in at these levels?
Largely into the abrasives and the industrial growth, we are expecting it to rebound very sharply in 2022, and Grindwell Norton is expected to do well. I think it can be a good hold in the mid cap category in the capital goods sector, but you should also hold large cap stocks like Larsen Toubro or Siemens.
Actually, I hope that even resolves even Indu's query on Grindwell Norton. She was also asking the similar view on the counter. Okay, this one is from Nimesh Shah. He wants to know if KEI Industries or Finolex Cables, which of these stocks can be bought for the longer term and at what price? What's your take, Kunal? KEI Industries or Finolex Cable, what should Nimesh look at?
Both stocks are good in a relative sense, because they have been good, consistent outperformers, not just over the last 2 years, but over the last, I think, 5 years, 10 years of the price history for themselves. But you also have to understand that these stocks, they tend to sentiment is buoyant, and if you assume that market sentiment, say over the next 6 months to 1 year, remains or perks up from current levels, then I believe a slight better outperformer in that sense could be KEI Industries. The stock has also marginally come below its 50-day moving average today, so I think price wise as well looks to be an attractive zone where you can start entering and nibbling at current levels.
Okay. The next one's for you, Saurabh, and it's on the insurance companies. We've got Sunil from Muscat who's writing in, and he's asking about SBI Life versus HDFC Life. Which would you buy, or would you split your money and put into both?
Be a better idea to split money and put into the both counters. But having said that, I think the valuations at which these insurance companies are trading a bit too high. If you compare insurance companies trading in the world over, the premium at which in India they are trading is extremely high. I think they are factoring into the future growth and the under penetration in the prices. So my take would be don't invest a very large portion of your portfolio as a percentage, and better invest in both the companies.
Chintan Kapadia, and he wants a 2-year view on Sona BLW. He's already holding 100 shares, which he's purchased at 720 rupees per share. He wants to know whether he should average at these level, or is there some more possibility of some downsides? Should he switch to some other counter? What's your take, Saurabh? A lot of questions packed into one. But Chintan wants to know what should he do with Sona BLW. He's purchased it at 720 rupees per share.
I think companies putting up a good show. The largely re-rating happened because of their some amount of sale going into the EV side, and it is largely taken as a proxy of the EV. So I think you can average a bit, but you have to hold for a long term. The valuations are asking. I mean, in the auto ancillary pack, it is trading at a good amount of premium compared to its peer. But having said that, growth is there. Keep holding on to it.
Okay, I'm just pulling up Sona Com shares, rather Sona BLW Precision Forgings as it is currently called. We've got Ramasurya who's asking about sort of a couple of counters. I don't know if they're like to like. We've got KPIT Tech and we've got Sona BLW Precision Forgings at different plays. Which one would you pick at this juncture?
Tega Technology is largely a play which is being played as they are doing a lot of engineering on the EV side, and the stock has got re-rated. It is trading at a huge premium to even its large cap companies in the IT sector. So I would not recommend to buy here, and the other stock also I would not recommend to buy. Instead, I would rather recommend to put. I would refrain to put money in the IT sector. Per se, I mean, I expect that the money is shifting from the growth to value. The reason behind that, so rather put money in the industrials, banking, or the real estate. And among the auto ancillary pack, I would recommend to invest money in the Bharat Forge.
Is coming from Kathi Ravanan, wants to know about Tega Industries. He was allotted shares in the IPO at around 453 rupees per share. He wants an advice on the 2-year period. How does this particular counter look like? Since it's a recently listed counter, I'll ask you, Saurabh, do you track this one, Tega Industries, and what should Kathi Ravanan do with his holding?
It is a very newer listing, so we haven't covered a lot on this stock.
All right, so let me move on this one then. It is from Sarvajit, and he's saying that he's holding 20 shares of IndiaMart, which he's purchased at 7,700 rupees per share. He has a long-term view on this particular counter, so he wants to know whether he should average at current levels. What's your take, Kunal? What should he do with his holding in IndiaMart? No doubt is reacting to earnings today.
Definitely look to average. The indicators on the daily as well as on the weekly charts for IndiaMart have entered into the oversold territory. So maybe a process of another 3-4 trading sessions where the stock may try and form a short-term bottom for itself. Price-wise, I think at 50 to 50, 50 to 70 seems to be a very attractive level where you can start looking to average as well as enter fresh at current levels.
Okay. I promised Aarti that I would take her query if she was tuned in, and she's confirmed that she is. Saurabh, in terms of a tactical or sectoral allocation, would you reduce your exposure to IT and increase in pharma and FMCG at this juncture?
Rather, I would definitely reduce my exposure in the IT sector, but at the same time, I would increase the exposure in the banking, capital goods, and the real estate, rather than putting money in the other sectors.
All right, and with that, let's kickstart with our rapid fire segment. And this one is from Nazir Sheikh. He wants to know, can we buy Bajaj Finserv stock currently? What's your take, Kunal? Can you buy Bajaj Finserv?
Yeah, I think at current levels, 15,600 approximately, very attractive level to buy Bajaj Finserv, provided he has a longer term view.
Okay, Saurabh, Relaxo Footwear, would you buy at the current price for the long term? Akshay wants to know.
I would rather avoid.
Okay, this one is from Bharat Makija. He's already bought HDFC Life at the levels of 669 rupees per share. He wants to add some more at current market price. Should he do that? Because he wants to hold the stock for the next 10 years. What's your take, Saurabh?
He can add more.
Okay, we've got a question coming in on this is from Kiran. For the next 2 to 3 years, Kunal, in the private sector banks, this I think you've answered, ICICI or HDFC Bank. Which of the two would you pick?
I think both. If you can probably diversify, that will be quite exceptionally well. And also, I think if you want to add on a banking name, then you can add maybe an SBI.
Padma has given me a slew of stocks whether she should look to invest currently. She said, is it MTAR Tech, IRCTC, Z, Birla Soft? Can she look to enter these counters at current levels, Kunal?
Yeah, I think you should try and take advantage of the market correction currently, as well as if in case over the near term there is any further legs of correction. Mid-cap stocks correcting 20-25% from their previous highs seems to be a good entry point.
Kunal, sorry, the previous question that I asked you was a little bit wrong. The question Kiran's asking is, would you pick ICICI, HDFC Bank over the frontline IT stocks?
Well, absolutely. So I've been going with the theme over the last 1 month that the IT stocks are bound to get into an underperformance zone and the outperformance would be led by banking names. So I go with the theme, and my expectation is over the next 4 to 5 quarters, you should see the banking stocks outperforming quite significantly over the IT names.
Okay, and that brings us to the end of the query segment. Gentlemen, thank you so much for taking the time and for answering all the questions that you did. I still have a lot of unread messages in front of me. Unfortunately, we don't have the time to take all queries, but hopefully the queries that we did answer are useful to you in some way or the other. Do stay tuned, do stay patient with us. We'll try and take as many queries as possible tomorrow as well. We've got more lined up ahead of this short break, so do stay tuned.
देखो 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 नया टीवी देखो got the veggies from Chodu shop. He gives the right rate.
Yes, Papa.
Decided.